Welcome everyone. Is everyone able to hear me? Welcome to the Twitter Space Spotlight 3.0. Summer is here. How's DeFi doing? Welcome to joining us in this morning or the afternoon or in your time tonight. Spotlight 3.0 is the podcast hosted regularly by Huobi Ventures. Huobi Ventures is the global investment arm of Huobi, integrates investments, incubation, and research to identify the best and brightest team in the world. As a 10-year pioneer in this industry, Huobi Ventures explore, unveil, and assist the industry's cutting-edge technologies and emerging business models, providing finance, resources, and advisory to projects to grow the blockchain ecosystem together. So in this show, we partner up with our analysts, portfolio projects, and partners to break down the industry tracks in depth. We're very, very happy to kicking off Spotlight 3.0 with a list of amazing speakers here for us today. So we have Lucas, the senior investment researcher at Huobi Ventures. Gerry Wang, the CMO of everVision. Eduard, the founder at ZKX. Eduard will be joining us. Sure. Oh, I see you, Eduard. We'll invite you as speakers. Shawn, the marketing director from Valera Finance, and Darius, the co-founder of Vertex Protocol. Welcome, everyone. So, before we officially dive into DeFi, why don't everyone just give themselves a quick intro about who they are and what your project's about. Lucas, as a Huobi Ventures senior researcher, do you want to start?
Yeah, sure. Thanks, Jenny. Hi, this is Lucas, and I'm mostly focusing on our Huobi Ventures project research and also portfolio management. Yeah, thanks for having me here.
Awesome. Eduard, do you want to start introduce yourself?
Sure. Thank you for having us here. Always a pleasure. We are ZKX, a perpetual swaps protocol being built on Starknet. We are in the world of ZK rollups and L2 scalability. Really looking forward to talking more about this entire new universe that's coming towards us.
Amazing. Shawn, do you want to share about Valera?
Okay. Hi everyone. My name is Shawn. I work in Valera Finance. Valera Finance is a leading provider of option trading that provides a transparent, trustworthy, and convenient decentralized mechanism without the intermediaries on options trading, but can imitate the visibility of centralized exchanges. Valera Finance launched version 2 in February 2023. Compared to version 1, this version includes new features like options trading, strategy, margin, liquidate. Version 2 is a complete decentralized option platform. However, it not only innovates and improves the features of DeFi option, but more importantly, we're actively exploring decentralized finance based on decentralized method of smart contracts to form liquidity management, trading, liquidating, and other processes in a brand new option field. Glad to be here.
Great to have you. Darius, do you want to talk about Vertex Protocol?
Sure would. So my name's Darius. I was a trader for many years in TradFi, and I now run Vertex Protocol. I'm one of the co-founders. And Vertex Protocol is cross-margined, cross-collateralized DEX built on Arbitrum, and we specialize in very low latency performance using our proprietary sequencer. So latencies in the order of like 5 to 15 milliseconds, and that means we have a lot of market maker support from conventional market maker names you would have heard of, which means we have excellent liquidity. So we just launched and just did our first $80 million day yesterday and growing very steadily.
Yeah, I just saw you guys surpass the 1 billion spot and perpetual markets trading volume. So congratulations.
Thanks very much. Yeah, a big day. So the team was very excited. But yeah, plenty of growth to go. Hopefully we're going towards $1 billion days rather than $1 billion months. So we'll see where we end up.
Cool. So I see that we have a lot of layer 2 builders here today. So everVision from RV, ZKX from Starknet, and Vertex Protocol from Arbitrum. So we're actually covering a lot of layer 2 and Ethereum things today. So we'll be really excited to talk about DeFi and what is going on the Ethereum ecosystem and layer 2 ecosystem in the last 2 years in the DeFi field. Actually, when I was searching and going in the internet, the concept of a DeFi 2.0 has been going on for the last 2 years, I think, with the successful completion of Ethereum's Shanghai upgrade. What is the current new DeFi landscape right now? Lucas, maybe do you want to share it first? Or
Yeah, sure. Yeah.
Anyone want?
Yeah, absolutely. Yeah, sure. I think Shanghai upgrade definitely sent out like a positive signal to the whole market, since we can see the number of Ethereum staking is increasing rather than decreasing, and more and more Ethereum is being transferred from centralized exchange to on-chain, which all reflects, I think, the growing confidence in the Ethereum ecosystem. And of course, we've seen LSD protocols emerging as a significant player in the total TVL. With Lido taking the lead as the largest project. And also we can see the integration of these LSD protocols and traditional DeFi, including classical DeFi protocols like DEX and lending platforms. They all been involving LSD business. Like we can see that ST, ETH pool on Curve, or like RV taking those liquid staking tokens as collateral, which all bring, I think, more energy and generate more trading volume and profit for themselves. So it's a very good sign. And before Shanghai upgrade, people can only use DEXs to get their Ether back. And actually, after the upgrade, because there's a limit on the amount of Ethereum that can be extracted on chain daily. So DEXs is continue to be an important channel to exit the Ethereum, and for all these like liquid staking tokens. And also, we've seen all this rise of these LSD5 protocols, such as Pendo, or even some stable coins that are backed by LSD. So, overall, I think the DeFi space is getting more diverse, and it's getting more interesting and exciting ecosystem.
Thank you, Lucas. Gerry, maybe do you want to share what your insights into the current new DeFi landscape?
Yes, of course. I haven't introduced myself, so I will do that.
Oh, sorry about that. Yeah.
No problem. Thanks for having me here. I'm Gerry, CMO of everVision, and I have been working in the crypto industry for 5 years. For the first 4 years, I worked at EOA crypto wallets and token. At the beginning of 2022, I jumped out and joined in everVision. And everVision is one of the top projects in the Arweave ecosystem. We have produced several products on top of Arweave. All of them are infrastructures for developers and ecosystems. So we are a Web3 infrastructure provider, and we have prepared 4 main products for developers and the ecosystem. They're a payment protocol, EverPay. It's an instantly and a zero gas fee multi-chain payment protocol. And second is a cross-chain DEX network, PermaSwap, and open source developments toolset Web3 infra, and a co-building DAO PermaDAO. So yeah, that's what I want to introduce our company. And about this question, yeah, I just want to add some data about DeFi. First of all, the total number of DeFi users since 2020 is between 6 to 7 million, right? And however, from the perspective of DeFi monthly activity, the monthly activity of DeFi summer in 2020 is about 200,000 to 300,000. In May 2021, the number of monthly active addresses reached about 1 million all-time high. After the last bull market ended, the number of active addresses per month hovered around 500,000. And last month, in May 2023, the number has risen to nearly 800,000. So I think we have a consensus now that the DeFi, even after several years of development, but its active users and the total market cap have a very large gap compared with the traditional financial industry. So I think the main reason should be that the DeFi is still a very high barrier to use, and not the majority of ordinary users can understand and can operate. Moreover, the DeFi application scenarios have no essential breakthrough. Mainly in the DeFi summer period, the pop out of the application as a mainstream, and this cannot be well applied by the traditional industry. Last but not least, the DeFi performance. Due to the limited performance of the public chain, the current DeFi application can only operate at low frequency and cannot meet the requirements of high frequency operation. So therefore, the scope of a large scale applications is limited. So I think we should fix that those problems, and then we can have a very bright future of DeFi. So yeah, that's what I want to share about it. Because we are in the Arweave ecosystem, so I'm not familiar with Ethereum's Shanghai upgrade, so I can say more about that. So sorry.
Thank you for drawing us a really clear and quantitative picture of what the DeFi landscape, the DeFi user landscape looks like, and what problems that we might face after the DeFi summer, last DeFi summer. And Gerry, you guys have done a lot of stuff in your projects, and I can't wait to discuss more about what you guys are exploring right now. Yeah, so Edward, do you want to maybe share your views on that?
Sure. So I agree with Gerry that what we're living right now is probably an extension of this initial explosion within DeFi that we all kind of experience, from 2020 onwards. There's still quite a bit of challenges to solve in order to really and truly unlock what would be the next generation of DeFi products. As you mentioned correctly, these upgrades within Ethereum are a key piece to unlock additional throughput, additional TPS that will enable further scalability. Some of you obviously might have heard about ZK rollups and optimistic rollups. From our perspective, ZK rollups is probably one of the most solid answers in terms of scalability, because zero knowledge technology allows you to verify any computation that's done, and then prove that and send the proof down chain. And it effectively has a sort of strange effect where you can pile up a lot of transactions within a single ZK proofs, and that allows you to make it extremely cheap for everyone to transact. But all of that will not really happen fully without Ethereum's upgrading with their own EIP 4844, which is the proto down charging, which basically enables these ZK rollups to post the ZK proof, the data, what they call data blocks, onto the chain in a much cheaper way. So that will decrease the transaction costs for everyone, and hopefully that will solve one of the main issues, which is transaction costs, along with speed of scalability. But as Gerry pointed out correctly, for a lot of applications like order books, the L2s are not necessarily the best answer, and we still need to come up with answers that will enable these applications to scale to milliseconds within seconds and milliseconds of execution. And the question mark remains, how do we compete with someone who's using centralized technology and that can actually execute at higher speeds than we do, and therefore they can support more users at a cheaper price. And that is one of the riddles that collectively, I think everyone is trying to solve. So we can get to these, basically almost near free transaction costs in a way that you can abstract away the entire layer of transactions from the user. And this leads us to the second big question mark that we have to solve as the ecosystem, which is the user experience. And for us, the big answer there is account abstraction. We think that every single piece in the ecosystem should be utilizing account abstraction in the near future, because that's how we can actually avoid sending the users down into the rabbit hole on having to figure out how to install their wallet, how to set it up, how to enable multiple networks within the wallet, how to bridge funds across networks. All of these makes it too hard for the everyday user to onboard. And that's why we have millions of users who are sitting on centralized exchanges, which have their own function, right? They have their own function as well. But effectively, if we want more and more users to bring and come to DeFi, we need to solve the user experience. And that's why I believe that we're still in a transitionary phase where the user experience riddle has to be solved, along with the scalability and the transaction cost issues. And if we manage to solve these three parts, I think we're going to be set for a new generation of applications that are going to be able to service way bigger number of users. And I think that's key, right? The maybe next corollary that we could mention is the fact that we're just starting to see how protocols in DeFi can interact with the real world, and they can bring real world assets, real world yield onto DeFi, and kind of have it offered across the world globally. So these are a lot of questions as well in terms of the off-chain on-chain divide that we'll have to solve throughout the next few years. And obviously regulation will play a big part on these, as always. But yeah, in short, we think that it's not only about scalability of transactions, but also how we solve the user experience and truly be able to compete with the simplicity of Web 2.0, which is basically, our actual target, I would say.
Very interesting. We're definitely going to discuss more about the user experience and scale the user experience part, and how you guys kind of exploring maybe outside of the what we are having right now, the main DeFi tools. But I want to go to our two other speakers right now. Shawn, do you have anything to share about what is the current landscape right now?
Okay, it's a DeFi project and focused on options. In our aspects, we believe that DeFi has been in the process of a rapid development and has a bright future. In fact, when we were doing industry research and technology development, we found that there are many concept innovations and technology innovations in the DeFi field almost every day, especially after Shanghai upgrade. So we are keeping on accumulating a lot in terms of option field we have set foot in. And many financial products in traditional finance have shown they have many new features and advantages compared to the DeFi field. Meanwhile, there will be some shortcomings for the traditional finance. So what we wish you to do is to maximize the strengths and avoid weakness, and enrich the ecology and the applications of DeFi. We still believe that the DeFi is just at the starting line, and it is a big blue sea that still need a lot of new applications in many aspects, such as the DEXs, wallet, lending, and the options like us. So we will keep on working harder and harder.
Oh,
Yeah, that's all.
amazing. Amazing. Darius, anything to add?
I mean, a lot of good comments there already. I'd say I agree with a lot of what Eduard and Barry had to say. I think with Vertex, we spent a lot of time thinking about UX as the kind of end point. And when you work back from that, I think you start to make a lot of good insights. So, Ed was talking about account abstraction. I agree. We think that's really important. Part of the reason we built on Arbitrum was because we wanted to have low gas fees. ETH-L1, I mean, it's like a stated aim of the Ethereum Foundation eventually. They just want it to be a kind of hyper-secure data store, and for L2s to be doing a lot of the kind of computation and more whizzy stuff on top. And whilst I think ZK is super interesting and probably be the future, it's not quite there yet. In the meantime, we sort of compromised with an optimistic rollout. But even Arbitrum has sort of said when zero knowledge is there, they'll probably move over to it as well. I agree, it'd be really interesting once EIP 4844 comes in. You'll see costs drop a lot, and that's going to open up a lot of possibilities. The one thing I actually disagreed with Edward on was around kind of low latency, high throughput functions like order books. It's something we spent a lot of time thinking about, and my background's in trading. I ran a lot of trading businesses in the past. I just don't know that blockchain is well suited to running order books, certainly not like time price priority order books where having like deterministic latency and queue ordering is super important to firms and is really, really important in how they build liquidity on a book. I kind of think what you're probably going to see is sort of hybrid solutions. We have one ourselves where we've built our own sequencer for our contract. It's like a Rust-based implementation of EVM, but that just allows us to run a gas-free order book for the low-value transactions, i.e., placing and cancelling orders, but then matches, which are super high value and significant, get past the chain, and that's kind of the compromise we've made. I think what you might see is like blockchain generally, as it evolves, loses a little bit of the religion about everything on chain, and it becomes more pragmatic, where you see some things on chain, some things are off chain. Especially as we see like more regulatory clarity, I think it's going to allow for more of these hybrid structures.
Cool. Maybe you guys can discuss more about the order book. Maybe there's like some breakthrough in that part that is hidden or not being seen. So really cool that you guys are able to share this.
It's very interesting, and I think he's right to say that not everything should be on the blockchain, and that's why this kind of leads us to one of the problems that we have generally right now in the ecosystem, which is how do we scale arbitrary computation that doesn't really need, that doesn't really fit the properties of a blockchain from an infrastructure point of view, right? And many projects in the space are still relying on Amazon Web Services or Google Cloud in one way or another to scale their computation. So it's kind of the big question mark in terms of, how we enable this side of arbitrary computation that is already solved for in Web 2.0, but we need to solve for in our ecosystem. And as the specific case of the order book, as he correctly pointed out, there's got to be like solutions that enable the verification of the order matching within the order book, and that verification can be done through some form of ledger, and that can be then settled, or recorded on the main blockchain, on the underlying blockchain. So you still have a certain sense of security and trust that you can have on the overall system, or I would say trustlessness. That would probably be the correct, way to put it here. But in a way, order books is one of the greatest challenges because you have a high speed environment that requires certain finality, and you cannot do that with any normal blockchain. So this hybrid approach it's kind of the way that most of the projects we are approaching it right now. The question is, how much decentralization is imbibed or within these hybrid solutions. And you find order books that are actually running on the background purely on Amazon Web Services, and they're 100% centralized. And then you have more hybrid solutions that are bringing some ledger and blockchain elements into it to actually prove that, okay, yes, whatever computation was done and order matching was done actually did happen. And then you can verify that and move that onto the on-chain part with the smart contracts. But right now, there is no, let's say, complete solution that allows for these arbitrary computation to happen and be verified within a consensus algorithm and within the main tenets of, let's say, blockchain, which could be, trustlessness, permissionless, and so on. And that is one of the challenges that I think we all face, and order books is one of the symptoms, I would say, because it's one of the clear use cases within DeFi that requires higher speed than what a normal blockchain can provide.
Oh, cool. So let's pause on that question and due to time reasons and maybe dive into our next questions. So this is a freely discuss a question. If you guys want to hinge in, you're free to do so. So as we have discussed before about the user experience, the UX, I see you guys are exploring the DeFi tools outside of just the financial transactions and benefit parts. I see everVision, you guys are exploring the PermaDAO and ZKX yourself is also a DAO. So maybe do you guys want to share more about what other directions that you guys been exploring, and how is it integrating with your current DeFi tools?
Yes, I can share our DAO first. everVision has indeed initiated a DAO organization called the PermaDAO. This DAO has two main purposes. The first, it aims to co-build the RWave ecosystem, particularly in Asia. The current ecosystem is mainly in Europe and the Americans. So we hope to gather more people to contribute to the Asian ecosystem. And second, we incubate the projects that hope to build on top of the RWave. We provide several levels of grants, and if a project is very good, we also have ventures with RWave official RWave org called RWave SCP Ventures, which can provide investment opportunities. As a contributor community, our DAO never intended to exploit the labor of contributors for free. We believe the DAO must have a strong structure with different sections interconnected to form a collaborative system with clear workflows. It has a mechanism to price each task and evaluates each contributor's contribution upon task completion, and then distributes weekly rewards. Throughout this process, we use the financial tools provided by everVision, such as everPay and PermaSwap. And everPay is an instant payments network I just mentioned before. The users can transfer crypto instantly and without any gas fee. So some projects use it to build a community tipping boat. We now can transfer crypto in a Discord channel. So we use this for weekly rewards distribution. Another tool is the PermaSwap. It is a multi-chain instant DEX without a gas fee. So contributors can use this DEX for value exchange. In addition to that, we also collaborate with some regulatory financial institutions, such as an OTC company. We have integrated an OTC channel on everPay, so that users can use their credit card or the bank card to purchase USDC on everPay directly. And these days have a campaign. If you buy a USDC with fiat waivers fees until June 22nd. Yeah, and we also collaborate with bank. This bank is based in Malaysia, and it is a regulatory bank. They have issued a stablecoin on everPay directly. Yeah, this stablecoin's name is ACNH. It is an asset that's one-to-one backed and backed offshore RMB. So you can find it in everPay and swap in PermaSwap now. And if you open an account in this bank, you can issue or redeem ACNH. So it is also a channel for users on ramp and the off ramp. Yeah, in the future, these assets will have a financial derivatives or worse management of products, which can provide services for DAO contributors. Yeah, thanks.
Cool. You guys have been using this to supporting your ecosystem and basically introducing more people to your ecosystem through your service and partnerships. So it's really interesting. Any other people want to maybe comment on your use of your exploration?
Sure, if I may. I think our thesis when approaching DAO governance is that right now in DeFi, DAO governance is kind of broken. If we consider what's the premise of the entire ecosystem, right? We have these open source protocols deployed on chain that can be accessed anywhere in the world, cannot be censored, and are immutable. So they cannot be changed arbitrarily. And if we consider these premises, we quickly realize that attaching a freely traded governance token to it that can be bought and traded by anyone has its own set of problems. And we have seen that with, let's say, for example, the governance issues around Uniswap, where certain entities or institutions buy these tokens and then they try to sway and control the votes according to what is their own interest. And this is, something we have seen in the traditional financial world. It's nothing new to any of us, that have seen how the stock markets work. But it's not necessarily the ultimate goal that we're trying to achieve here, which is to offer a better, more representative, more inclusive, more global and decentralized version of the traditional financial world. And we're not achieving that necessarily with governance tokens. So it remains as a question for us to solve, which is, airdrops don't necessarily work in the long term to give representation to the right people. And who are the right people? And I mean airdrops and governance tokens. The right people is the people who are actually using these protocols, the stakeholders, the users, the people who have skin in the game. We want the people who have skin in the game to be able to decide what happens with the tools and the platforms and the applications that they're using, not just some unrelated third party that may have some personal interest or corporate interest in controlling and using that particular open source protocol in their favor. We're not saying that, these people should not have a voice. Everyone should have a voice, and I'm sure these institutions have a lot to contribute. But they should not necessarily always have, easy and free access to control any DAO and any protocol as they wish and they want, just because they have more money than everyone else. And that's why we think we kind of need to find new solutions that are better than governance tokens. And governance tokens kind of have outlived their time in a certain sense. We need better solutions. In the case of ZKX, is liquid governance, which is basically a concept that could bring some inspiration from soulbound tokens, with the difference, or the main concept is to actually have a set of smart contracts that award representation to the stakeholders of a protocol. So if you're a lending protocol and you're a lender and a borrower, both sides can earn representation within the DAO, and they can use that representation to vote and make decisions while they're using the protocol. And the same goes for a perpetual swap protocol, where you can reward the traders, the market participants, with representation within the DAO, as long as they're actually, participating in the markets. And you can attach this system within, gamification. You can attach it within the UI of your own application. You don't need third-party, third-party platforms where you have to connect your wallet and jump from one platform to the other to be able to participate in the DAO. For us, it's important that all DAO DAO platforms and mechanisms are within the main application UI. So for the user, it's very easy access, and they don't have to jump through multiple hoops to actually know what's happening with the protocol they're using. And B, there's got to be a way where we separate freely traded tokens from actual representation and governance of the DAO. And we think that is an important step forward to enable, more open governance and representation of the people who are actually using DeFi to date.
Thank you. Any other comment for this question?
Yeah.
Go ahead. Yeah.
Yeah, maybe I can share some opinions. That in the first stage, we have complete the fundamental functions of options, such as the trading, margin, and the liquidating. And now we are working on the strategy of the options. It is much more complicated than we think. So we now released a new technical map in which we integrated the relevant features of LSD5 and option while developing the strategy. We're now working on the DeFi options vault. We call it DOVS, and you can see it as the DeFi option strategies, and reversing our demand for option based on our strategy, or DOV. We implement DOV in the hope of bringing more enrichment to options application scenarios. So DOVS are tools for implementing option strategies in the DeFi environment. In DOVS, investors will stake their assets into vaults, which deploy the assets into option strategies such as short-covered calls. This provides relatively higher underlying returns in the DeFi space. So DeFi options vaults include two kinds of strategies. The first, that we can see it, it is very commonly seen, that is the ETH strategy. Now we offer ETH staking strategies that allow users to earn passive income by staking their ETH within the system. As they earn income, they have the flexibility to restake their earnings on platforms like Tenet and EigenLayer and so on. And second one is the USDC strategy that is very special for other strategies. The users can stake USDC to receive share tokens provided by DOV. And DOV exchanges the user's staked USDC to ETH through the Mata decentralized exchange aggregator platform. Then the ETH is staked on the Ethereum through LSD to secure the Ethereum network and earn ETH rewards. DOV uses the equivalent collateral STETH obtained from LSD to create covered calls to sales and sells them through an automated market maker to generate premium. Keepers perform actions such as opening, closing, and settling positions to rebalance the option strategies. This involves adjusting the assets allocation of the portfolio back to its initial target. For example, if the price of staked ETH drops, selling ETH to acquire USDC ensures investment returns. When options expire, users can withdraw their principal and earnings. Alternatively, users can sell share tokens to receive corresponding earnings before the expiration date. So the APY earnings will be more than the ETH strategies.
Okay, thanks for sharing. Let's dive into our next question. The recent bankrupt incidents for several banks around the world and the potentiality of US having a treasury bond default, how does this affect the space of DeFi? Do you guys see anything that's like the numbers changes recently, or that might happen, that might have a long-term effect on in the DeFi field due to like the offline off-chain incidents that's happening around the world? Anyone want to comment on this, or
Yeah, sure. I'll go ahead. Yeah, I mean, definitely these events. I mean, it really shows the weaknesses of the centralized financial system, and we can see that more and more people gonna realize and question like the safety and the transparency of the centralized finance, and maybe driving increased attention not only towards DeFi, but to the whole crypto and blockchain business. We do see some investors and users choose to move their assets into cryptocurrency, maybe as a hedge. But on the other side, we still facing challenges such as user experience and security issue. Think back to the I think March when the bankruptcies happening. USDC also took a major hit. So all I mean is we still need to figure out how to avoid these kind of things. There's still many challenges we're facing forward.
Great. Any other comments on this?
Yes. In this morning, I saw news about the U.S. House just approved the debt ceiling package. Even if it has to be voted through the Senate and signed by the President Joe Biden, I think it will be solved on a D-Day. They call it D-Day, June 5th. Because both parties know that the risk of a default is huge. So although I don't think the U.S. bonds will be a big problem in the short term, but in the long term, the risk of U.S. dollars is indeed we need to face, especially in the crypto industry. The current mainstream stablecoins are anchored U.S. dollar, right? Like USDT, USDC, DAI, BUSD, etc., etc. They are the main underlying collateral assets of the DeFi building, and their stability will seriously impact DeFi. USDC's crisis after the collapse of SVBs rehearsed all this. Yeah, so I think we need assets diversification, especially in stablecoin assets, not only US dollar stablecoins, but also Euro stablecoins, Singapore dollars stablecoins, or Chinese yuan stablecoins, etc., etc. That is why we are working on that. Yeah.
Yeah, I do see a lot of major crypto stablecoin. They're decreasing their exposures towards the U.S. bond and U.S. dollars. So maybe this is another thing that we need to figure out how to make crypto getting less exposures by what is happening in the central, like the real world financial industries. That's not like getting less like effects from their stupid decision making progress, and keeping our assets to ourselves. Any other comments on this question? Then let's go on for our fifth question. This is targeting to Lucas. Lucas, as a researcher in Huobi Venture, do you want to maybe share about what we're looking at for what are we looking at for the future investment direction in the DeFi 2.0 projects?
Yeah, sure. So in the recent months, I think to be honest, I think we haven't seen a lot of, revolutionary innovation in the DeFi space. But however, we've definitely noticed some interesting trends. The first I wanted to draw is the constant demand of more user-friendly trading experience. We're seeing some interesting attempts to combine, the best of centralized exchange user experience with self custody advantage and of decentralized exchange. for example, we can connect to their wallets and deposit fund, and then all the tradings are done off chain, which Edward and I think Darius just mentioned. And the second trend we are observing is the hybrid model combining AMM and also order book. And so yeah, our investment in Vertex is a very good example of this model in action. And the second part is we also seeking improvements around capital efficiency and how to make liquidity provision simpler by lowering the barrier for users to becoming a liquidity provider, and so they can enjoy higher yields from market making and without high level strategies or suffer less from the impermanent loss. I think the good example of this could be Trader Joe's liquidity book and its auto pool feature. If you want to check it out, you can go to see it in the Trader Joe's website. And actually, on the layer one blockchain side, we actually don't have any specific preference when it comes to position any certain ecosystem, but we do see layer two is a very important part, especially those who are using ZK proofs as a technology. Basically, we believe that the speed and the cost effectiveness and also security advantage brought by layer two could enhance the strengths of DeFi in the best possible way.
Thank you. So just a conclusion of this tour space. Do you guys see the coming of DeFi Summer 2.0? Is there a certain breakpoint, tipping point that might lead this to happening? Gerry, maybe do you want to share your perspective on this? Anyone want to share? Do they see the coming of DeFi Summer 2.0?
Okay.
I think, yeah, go on.
No problem. You go first.
I think we are at a pivotal moment, right? I mean, some of you have experienced 2018-19, right? Kind of that transitionary phase where there was a bit of uncertainty. We were not quite sure what was going to happen next. There was already some, ideas about what would happen with smart contracts and what could be done with it. And there was some initial projects, but it was still somewhat, of a transitionary phase where there was a lot of uncertainty. And probably, the last 12 months have been a similar phase, and we might have a few more months of these bits of uncertainty where builders are still building and they're preparing, we're all preparing the next big wave that's going to happen. But there's still a little bit of that uncertainty in the air. And that is fine. And we see that there's massive progress being done on all fronts by all these major ecosystems within DeFi. And obviously, there's still plenty of trading volume around. But I would say that we still need some more time for everyone to kind of put the pieces together in a way that, we can start bringing way more users on board, And we're not talking about, maybe the couple 100,000 users that are actively using DeFi these days, but actually, the millions and millions of users that could be using a fintech app like Robinhood on a monthly basis. So how do we compete with that? I think it's going to still take us some more time, but we're all taking collectively, I think, the right steps towards that vision. And obviously, we're still providing value on an everyday basis. And we can see that, by the fact that we still have plenty of volume and plenty of trading activity happening, which is something that in the 2018-19 phase, might not have happened as much, where we actually saw huge drops and volume drying up across the board. And I think this time we have managed to avoid that, and the ecosystem is obviously in a much more healthier space than what it used to be back then. So overall, we're still strong. We just need to keep continuing moving forward.
Thank you, Edward. Shawn, maybe you can go next.
Yes, we think DeFi is a big picture, that there will be many checks and many challenges and opportunities as well. So everybody can find a position in this good picture, and innovations and challenges are happening every day. We need to keep updating. The scale of the industry will become larger. And on the other hand, the number of high quality projects is still very few. So I think it's a good chance, but it's still a big challenger for all the people who want to join in this field. Then maybe they can be a big project in the future, but they also can be a big failure there. So everybody should be noticed and maybe do their best. Yeah.
Cool. Darius, I thought you would like to talk about this.
Yeah, I think it's similar to what these guys said. Like, at the moment, we're in a kind of challenging environment. So I wonder if we might see some consolidation. We've seen so many protocols fire up, and really, like a fork of another protocol is not really adding anything to the ecosystem. It's just diluting impact. And I know it's a bit of a cliche, but bear markets are for building. I wonder if what you're going to see is the next wave of innovation is going to take root. And as soon as the macro environment is better, you're going to see these projects that have really done proper building are going to start taking off. And that's the kind of mindset we're trying to bring to things, is be best in class now and be well placed to take large market share when the market picks up again.
Amazing. Gerry, are you here?
Yeah, of course. Personally, I think at this stage we already have a lot of infrastructure in the industry, and it's time to bring Web3 or bring the DeFi to the traditional industry, traditional financial industry. I firmly believe that's the next wave, whether it's an explosion of DeFi or the arrival of the bull market, can't be achieved without a surge in Web3 applications. We need more applications to onboard more users and attract more money. So we need work harder, keeping building and push the whole industry forward.
Lucas, do you have anything to add on this?
Yeah, sure. I mean, there's already a lot of good comments, and maybe I want to add something. I think whether or not DeFi Summer maybe 2.0 is coming is not solely rely on the development of DeFi itself. I think other areas of blockchain technology also plays a big role. For example, I think interoperability and cross-chain technologies could have a significant influence on DeFi. But at present, cross-chain bridges remain one of the most easy to be attacked kind of protocol. So the key challenge we're facing is how to build safer and a better bridge to enable users to perform cross-chain operations. And also, I think DID, decentralized identity, also plays a very big part in DeFi, especially maybe for top-tier DeFi projects like Aave or Compound. this kind of lending protocol, I mean, the idea can greatly enlarge the potential. I mean, of these kind of protocol. Yeah.
You guys have been all giving great answers. I do think that DeFi, the success of DeFi or the emergence of DeFi is not depend only on DeFi itself, just as Lucas said. It's no matter it is GameFi, no matter if it's social fi or NFTs, the volume and the introduction of new users will come down to DeFi and using DeFi naturally as a way to integrate or interact with the crypto world. So I can't wait to see what will be coming next in the next 1 or 2 years, how the different fields of crypto industries working together to maybe build a more diverse or more interactive way of doing DeFi or doing digital transactions or digital living styles itself by utilizing DeFi tools or other tools, other applications that's around. So thank you guys for sharing all this amazing insight. There are definitely a lot of things that needs to be built, but I think we will tackle it one by one just through the intelligence of different developers around different blockchains and around the world. Yeah, thank you guys for joining us. Amazing stuff have been shared. I definitely will look into the difficulties and potential solutions that might be needed in the DeFi field. So thank you guys for sharing.
Thank you.
Thank you.
Thank you so much.
Thank you.
Thanks, guys. See ya.
I'll concluding this tour space for now. Have a great weekend.